So where do you disagree with Jeff? Obviously on Bitcoin. We'll come to that.
Yeah, I disagree with Jeff. I think most specifically on his idea that the Fed is not a central bank. Okay. So he said the Fed is not a central bank. It doesn't really know what money is and it can't really affect the economy. I take some issue with that because let's talk about the two things that the Fed can do. They can ease or they can tighten. Why do they ease? Because the economy is slowing. Why do they tighten? Because inflation is hot, right? So we don't have a ton of evidence over the last 15 years of what the Fed does when inflation is really hot. We only have about 1 year of data, which is the last year. And what do we know? They're raising rates to bring it down. So let's talk about the easing first. This is where I would agree with him that the Fed is not able to stimulate the economy because of the Eurodollar system. So let's describe like where he's accurate. When the Fed lowered rates to zero, it saw that it wasn't able to boost demand. So it did another easing measure, which was QE. And they saw that it didn't really boost demand. Inflation was sticky. You guys had that chart up. Inflation was very low for that whole period. So what is that called? That's called a liquidity trap. When the economy is so slow that even rates down to zero don't boost it, there's nothing else you can do. The Fed wasn't going to send rates to negative 2%.
You're out of bullets.
They were out of bullets. And why was the economy still slow? Why was inflation still slow, even though the Fed was easing? Not because they're not a central bank per se, but because the contraction in Eurodollar credit, meaning the willingness of Barclays, SocGen, BNP Paribas, Banco Santander, the willingness to issue dollar loans was not there. So the aggregate demand of the world slowed due to the contraction of the Eurodollar credit system. And the Fed lowering rates to zero and doing QE, which is just creating bank reserves, didn't do anything to stimulate aggregate demand. I agree. The Fed was not a central bank that could really control money in that situation. But what's happening with hot inflation? And I know the interview is a couple months ago and inflation was, getting there. The Fed wasn't super aggressive at that point. But look at what the Fed has done.
Well, should we remind ourselves of what Jeff said? Because I do remember this bit. He said the expansion of money doesn't drive inflation. And he showed us 2 periods of inflation, high inflation. Correct me if I'm wrong here, but it was post-World War II and then post-COVID. And he said these periods are periods of an intense increase in demand for products, services, etc. And that's what drives up.
It was actually supply shocks.
Yeah, supply shocks, not monetary expansion.
And I do agree with that.
Okay.
So I'm not this, I don't have the word transitory on my hat and walk around with it because I think that was a little arrogant of the Fed to claim that it was transitory. And I actually believe that we're in...
Well, arrogant or to soften the blow?
Well, let's just say that they didn't see this coming. Because it wasn't in their models. Inflation runs hot when you have, from the demand side, when you have more demand than supply. Mm-hmm. That means the economy is doing really well and there's not enough supply to satisfy the demand. And so prices have to go up. That is not what happened. That's why the Fed wasn't able to forecast the inflation. The inflation, in my opinion, was mostly due to the supply shocks to the economy. Same thing in the 40s where you have a post-World War II and supply chains have shut down and have to be reorganized. So you have to ratchet up prices and let everything kind of sort itself out. But again, to slightly disagree with Snyder, are you really going to say that the stimulus, both fiscal and monetary at the same time, didn't contribute? It had to have contributed, especially because it wasn't just QE. Like Lynn talked about, it's QE plus the checks that went out. That is real money in people's pockets. It does boost aggregate demand, and it should drive prices up. So It's not just a supply shock.
It's a complicated picture.
It is a complicated picture. It's not just a supply shock, but the supply shock is, to me, the main driver. It should fade, and it is fading slowly, but it should fade, meaning the inflation should fade over the coming year plus and come back down. But are we going to go back to this 2% inflation or even lower due to a contracting Eurodollar system and lack of confidence in the bank or lack of lending, right? Lack of willingness to lend? Way too early to say that, because in a post-pandemic world, supply chains have been completely reorged and trade relationships have been reorged. So over the next couple of years, we'll get to see where does inflation come back down. But I do agree with Jeff in that there is no runaway inflation. This is not driven by QE and fiscal stimulus by itself, and that inflation will come back down. I have a big problem with this hyperinflation narrative or runaway inflation. I think it's nonsense if you look at the data and you look at the QE during the 2010s with no inflation. It's really hard to say that QE is the driver of inflation.
All right. As a Bitcoiner, I am not a big fan of Stephanie Kelton. But is there some truth to what she says in that expanding the money supply, increasing the money supply is okay as long as you can keep inflation under control? And where other people are perhaps wrong is where they think that this kind of monetary expansion is the cause and can lead to runaway inflation.
The problem with the Kelton and MMT thesis is that it chooses to ignore math. I have a big problem with that.
Yeah.
Even if you want to say, if you say that QE doesn't cause inflation and that high deficits also don't cause inflation, you can look at empirical data and say, okay, during this period, that is the truth.
But what I say is, she would say there's an acceptable level of inflation. Now, Ovik Roy would completely disagree, and if anyone hasn't listened to the show we made with him, they should, because we talked to him, and he talked about the widening wealth gap, and he even said, look, even at 2% inflation, that has a catastrophic effect, compounding effect on the poorest in society. I think what she's saying is that you can use QE to stimulate the economy, to put checks in people's hands during times of economic crisis, as long as you keep inflation under control. I don't think she's saying it doesn't cause inflation.
Sure. So the problem with it is that what you're doing is you're setting up this winners and losers system, and she's trying to say that there are no losers, and
that's the point.
And I really don't agree with that. It also comes down to central planning. A lot of Bitcoiners hate central planning, and they want a world with no central planning. But is that a likely outcome for our governments over the next 10, 20 years, that they're going to give up central planning?
They're not going to give it up. Might be taken from them, but no.
But how would it be taken from them?
I mean, look, I'd have to sit about and map out the scenario where... So the amount of times I use Bitcoin right now for my transactions is more than it was a year ago. And that was more than a year before. And my experience in going to El Salvador when I went to Zonte, and it was like my fourth time I went there. I didn't actually go with any dollars, and I didn't need them because everywhere accepted Bitcoin. And yes, it was an experiment and a bit of fun to constantly pay in Bitcoin, but at the same time, I didn't need any dollars. There will come a time where I could perhaps completely exit from the traditional fiat world system because Bitcoin is so ubiquitous that I could just use it. So I see a scenario where, like, over time, it can cause an erosion. Do I think it will happen? No, but I can see a scenario where it does.
And I agree with you in that there is an erosion, but it's so marginal that it doesn't have a material effect on the dollar or the U.S. government's goal of central planning. Just the way that politics have evolved to where they are, there will always be central planning.
But maybe it will change. It may be in a scenario whereby we are we have reached this layered money world, which is built on Bitcoin, that they act more like companies because, yeah, I talk about this all the time, Nick. If I want to take a loan, I have to pay it back. If my company wants to take a loan, I have to pay it back. The government doesn't have to do that. They can take out loans, they don't have to pay it back. But in a Bitcoinized world, they can't do that. No, the money they spend on their centrally planned projects will have to come from taxation. It can't come from deficit spending because they won't be able to deficit spend. So then I think what it becomes is more like parties become more like companies, and you have a choice of which company you want to live under. And it took me a long time to get to that. It's a thesis that might completely not play out, but I see it.
Yeah, and I don't think that fractional reserve banking is going anywhere. And so because it's too easy for the government to finance itself without like a sound money standard or having to collect all the tax revenue, it's too easy for them to politically do it. And so that's why I view that situation will continue, and that Bitcoin and Bitcoin's price will continue to be a check on that system. Uh-huh. And so when it rises too much, the central banks have to fight back.
Right.
And that is my thesis about, sitting here and claiming that Jay Powell saw 70,000 in November 21 and said, I have to hike rates. It's a little bit of hyperbole, right? But my point here is that they have to respond to what they're seeing. And so if they see their reputation crumbling, they have to fight to protect it. And it doesn't mean going to a non-fractional reserve system. It could just mean increasing reserve requirements, increasing real interest rates, and proving that they're here to not just be easy monetary policy, but they could actually do tight monetary policy. And what is it doing to the dollar? The dollar is at multi-decade highs, absolutely raging versus every other currency. So what death of the dollar? This is the most ridiculous claim that I hear, is that we're in for the death of the dollar. Versus what? Versus what?
No,
is
fair. It's fair.
What death of the dollar? The dollar is at 20-year highs versus every other currency. Gold isn't even close to its all-time high, which is supposed to be a check on the dollar. And Bitcoin is really the only thing that, if you take it back over a long enough time horizon, that it's actually outperforming the dollar. But over the last 5 years, Bitcoin is actually flat versus the dollar.
5 years?
2017 peak, that was 20,000. We're at 20,000 today. So if Bitcoin is at 20,000 in December of this year, it'll be flat for 5 years.
Huh. Fair, yeah, fair.
What death of the dollar? And I'm not like this pro-dollar, anti-Bitcoin guy.
No, you've been a realist. Yeah.
It's a realism, and it is. You also look at the percentage of global trade denominated in dollars. You look at, Santiago Capital on Twitter. You guys check him out. He has the dollar milkshake theory. It's also called the dollar wrecking ball theory. This is the correct theory. The dollar should be knocking off every other currency. Why? Layered money. It's the top of the stack. Every other fiat currency is a shit coin versus the dollar. I mean, US has its property law, tax revenue, and its 300 million citizens as collateral against its debt and its currency, right? It's theoretical, but it's there. Mm-hmm. What does the rest of the world have? Jack shit. I mean, they have some oil, right? There are natural resources around the world. There's some intellectual property, but where does all the capital innovation go? It goes to the United States. It has, and it will continue to. That will support the dollar versus other currencies, as people have demand for dollar-denominated assets. They have demand for property that is protected by U.S. property law, and the court system in the United States is still the strongest in the world. My pro-US stance is a relative stance versus property law across the world.
Okay, fair.
And that dynamic, the difference, the delta between the property law in the United States and the willingness to let entrepreneurs be entrepreneurs, which isn't legislated per se, It's more in the culture of the country.
Yes.
But it's legislated in a way that means that not everything is legislated, right? We will choose to have laws that are either vague or not there or only state level so that you guys can do whatever you want.
Pro-innovation.
Pro-innovation.
Yeah.
All of those things spell a very strong future for the dollar relative to other currencies. Now, Bitcoin will be a referendum on the dollar over a long time, but look at the last 5 years, Bitcoin is flat.
Yeah, I mean, look, yes, it is flat. I still think we're very early in Bitcoin.
I do too. I'm not bearish Bitcoin.
I know, and point to point, we've gone from 20 to 20, but really we've gone from a spike up to 20 in a very short period of time to a stabilization around 20. So that's to me, they're two very different 20,000s. And if you want to say 2017 to 2022, you want to go 5 years, well, where are we now? October? Mm-hmm. The run-up was November. Maybe it was 16, maybe it was 15. So, you can pick point to point and choose your period of time. But
yes, and the 200-week moving average of Bitcoin has never decreased week over week. It's going up consistently. It's above $20,000. At the Bitcoin layer, we have our TBL fair valuation framework. We have 3 different components to this confluence price that we believe is Bitcoin's fair value. It takes into account 200-week moving average, which is up a lot since 2017. Mm-hmm. It takes into account the realized price, which is an on-chain metric used to estimate cost basis of long positions. We also use the input cost. So we use the data from Riot, and we look at their cost for miners, electricity, et cetera, and what it costs to produce Bitcoin.
So what is a fair price?
Yeah, so right now it's about 22,000.
Okay.
Right? And in terms of a fair price. And when we see historically that Bitcoin below a ratio of 1 on this fair value ratio that we have at the Bitcoin layer.
Do you buy the shit out of it?
It's a buy. It's a long. I mean, and so I'm very bullish on Bitcoin over really any time horizon.
Right.
I don't think that Bitcoin is going much lower, and I think it's going much higher. But I'm presenting some counterfactuals about the death of the dollar.
Yeah, I know. I get it.
And so I completely agree with you that today's 20,000 is different than 2017's. Also, the adoption levels are higher. Bitcoin as a network is much more robust. It has Lightning Network now. There's a lot of properties that make Bitcoin really future built and future proofed. And that's why you want to be in that position. But talking about the death of the dollar being the reason to buy Bitcoin it's a little off to me.